This may be one of the final interviews that Phil Anderson does in the last stages of the 18.6-year real estate and economic cycle. Now, I've done 3 interviews with Phil on the channel already throughout 2022, that bear market year of the stock market. And recently, I had the pleasure of meeting up with Phil at his offices in Jakarta, Indonesia. Along with his team, we were able to discuss the 18.6-year cycle, real estate and economics, of course, amongst many other things that are going on in the markets. Now, if you're unfamiliar with what the 18.6-year cycle is, I've left resources in the video description along with those other interviews that you can catch up on after this particular interview. So we're going to assume in this interview that you've got some level of understanding about the 18.6-year real estate and economic cycle, but don't worry if you don't have that level of understanding. As I said, the links will be in the video description so you can catch up with understanding what this is about. Like I said, this is possibly one of the last interviews, so make sure you like and subscribe to the channel for any future updates about the economic cycle, the last stages that we are going through over the next few years. Along with that, I've also left all the links to Phil's company and his socials if you want to keep up to date with Phil over these last few years of the cycle. So for now, sit back, relax, enjoy the banter between Phil and myself, get an understanding of the cycle and where we're going from here, because I can assure you, you will not hear this information anywhere else across the internet for reasons that we have covered in previous videos and like we'll discuss in today's video. Welcome back to another video. I have a very special guest with me live this time, Mr. Philip J. Anderson.
Still as grumpy as ever.
That was going to be my joke, but anyway, it's taken. We're back with Phil. This would probably be our 4th interview we've done, first one in person. We started all the way back, I think, early 2022, before Russia invaded Ukraine, if my memory serves me correctly. Something like that. Since that time, at that time, but since then, we've had a lot of things happen. Prior to everything happening, from memory from that video, you said there was not going to be a land-led recession in real estate. Some people misconstrued that as there wasn't going to be any recession at all. So they were all waiting on a recession, and you said no recession. We'll take that as another win because there hasn't been a recession. You also said there's not going to be a collapse in the stock market. You said there was going to be a low at the end of 2022. You said the market was going to take off after that point. What's left to do?
Yeah. Get even more grumpy. That's what's left to do. Nobody's listening, Jason. The problem is nobody understands the central thesis. It's not a thesis. It's accurate. The land takes the gains. That's it. Nobody gets it. Least of all, the Fed, and least of all, the elite and those that attempt to run the economy. So why would you bother listening to anybody who doesn't understand the land market, who hasn't read Fred Harrison, who hasn't read Mason Gaffney? Why would you listen to anybody else who, it's because they're never likely to get it. So the land takes the gains. So we know the second half of the cycle which we're in, it's going to be prodigious. We've seen already that there's going to be a lot of tech gains. They flow eventually into land.
I guess we could jump in and say, you know, if no one's seen it before, no one's heard of the cycle. Obviously, many of you guys have that are watching, but
it's not about just having heard about the cycle. It's about really getting to understand it, such that eventually the enclosure of the land market, which we've got for private buying and selling, the land will take all of the gains that manifest. Once you get that to heart, you realise then the only question you've got to ask is, you realise then you must get a real estate cycle. The only question to ask after that, why is it so regular 18.6 years? Once you realise it has to be a cycle, and you're showing history, it is 18.6 years. So I don't think it was very hard to work out that what was happening in 2021, 2022 and 2023 is entirely normal. People saying it wasn't normal. You know, you had so-called specialists saying that this was the first time it happened, it was unprecedented and everything else. It's a crock of shit, you know. Putin invading Ukraine wasn't anything abnormal. We've seen all that before. And the Fed being behind the curve when it leaves interest rates way too long for too low, that's completely normal. Now they put interest rates up, it's completely normal. They'll overdo it, which is just so sad for society in general, because it places hardship on people that shouldn't be happening. The problem isn't the rates going up. The problem is they were left too low for too long. So people take out mortgages at rates that are absurd. And so some people are naturally, when the rates go back up, it's going to be hard.
Is that going to be one of the catalysts that lead to the peak, or lead to the collapse after the peak?
Well, the thing that people, again, which I tried to show people, interest rates going up is not a recipe for land price collapse or recession. I mean, you know, sometimes you will get some slight recession because there will be difficulties, but it's not a recipe for land prices to collapse. When interest rates going up, it tells you the economy is going well. And history shows that in periods when interest rates have gone up, so have house prices. And then you get a different dynamic coming in, which is really just the same, inflation. And in periods of inflation, people eventually work out that you have to hedge against inflation. You buy houses because they go up. So here we are.
Leads us back to the same point again. But, I mean, earlier, we're sort of jumping all over the place because of how many things we've talked about in the past. But going back one step, we're looking at why would you listen to anyone or the government, the politicians, yada, yada, if they don't understand it? It's almost like, well, how do you know what you don't know? Like, how do you know that they don't understand this? Or how do you even know you need to learn about the cycle? What got you first into it? How did you find out that?
That's
because
questions.
There's so many analysts on crypto Twitter, which is, a lot of my viewers are on. You're on there as well, or financial Twitter, YouTube. It's the same thing over and over again. Like, I'm finding myself becoming cynical and grumpy when I'm on these spaces with people. They just keep talking about the same shit over and over again.
You saw it again back in March when there were a couple of bank collapses, right?
Yeah.
People think this is unprecedented, that it's never happened like that before. And again, that's completely wrong. In 1984 saw a major collapse of a bank. It was the biggest at the time.
Well, they keep referencing back to 2008. That's why everyone was expecting a further collapse.
Yes, but it was for different reasons back then. The banks that didn't do so well back in March and a few months before that, it was never going to be systemic. It was just that a couple of those banks were very badly managed. I mean, they bought long-term bonds at precisely the wrong time. There was just no risk management at all. And the other thing to understand about that it was an entirely American circumstance. A bank collapse like the SVB could never happen in the rest of the world. It could only happen in America because the banking system in America permits banks to lend to just one captive market. So you had SVB lending to the tech sector, and so all its assets are in one sector. So there will come a time, always come a time, when one particular sector will have a tough time one particular year. And if a bank in the United States is particularly geared up potentially for only that sector, then it permits a bank run, because people will get a whiff of that sector having a lot of trouble, so they'll all take out their money all at once, and you get a bank run. But that's largely not going to be systemic. It's historically, the same thing happened years ago, back in the 1930s or even the 1920s. Commodity prices were on the downside of the K-wave back then. They weren't doing so well. So banks that were in regional small towns in America, all their depositor base were farmers. If the farmer's not doing so well, the bank's not going to do so well. And since they haven't diversified their deposit base, they get into trouble. That situation can't happen in Australia. It can't happen in Canada. It will never happen. It can't happen in the UK like that, because the powers that be, the governments don't allow their banks to have that one small, narrow depositor base. So it's a uniquely American phenomenon. And so in 2023, when we again got that phenomenon, it's not contagious. Yes. So anyway, what it shows us is that as we go in towards the end of this, more into the middle and end of this decade, probably banks may not be the cause of the eventual top of the real estate cycle and then turn down. So
because we had it earlier.
Well, because the banks are going to be, they're more tightly controlled. they've given us trouble now, so the Fed will attempt to have some sort of look in on what they're doing, right?
Do you think it's too early to see what those cracks could be, even though we think the top is a few years away?
No, it's not too early, but
yeah,
Jason, I'm not going to discuss that here. If people want to understand my thoughts,
I tried.
They want to get to me now. They're going to have to subscribe to the service.
I'll leave links to that.
I'm just not going to talk about that in public now.
That's absolutely fine.
It's become obvious to me what it might be.
Yeah.
There's a couple of things I would look at, but I don't discuss that in public anymore largely because when I do so, people don't have the background knowledge of why I would make that particular opinion. Yep. And then it just becomes, it begins to sound like another opinion.
Mm.
And I don't want to sound for people like just giving another opinion, right? Based on whatever it is I happen to see on a particular day. There's a very solid theory underlays stuff of what I talk about. And you have to get to that solid base first before you can then start to analyse what might be the reasons. And I don't want to sound like another person just giving another opinion.
Fair enough. I tried, guys. Links are in the video description as per usual with YouTube. There's obviously that book there as well, Secret Life of Real Estate and Banking, if it can be seen in the video. Otherwise, everyone knows already that I've talked about that book heaps of times.
Yeah. You have to know your history. Yeah, seriously, you do. And
that is the best place for the history if you don't want to go.
For the land market, yes.
For the land market.
Yeah, and banks to some extent.
Yeah.
Yeah.
Speaking of banks, we had the collapse March. That was an easy call by the sounds of it, but not for the rest of the 99% of analysts, which is the ones
getting
the calls.
We overlay people who are my subscribers. I do put out an annual forecast of the stock market the way I thought WD Gann used to do it. That clearly called for March lows, and you just got to put all things together, and it just looked to me like a classic setup.
Especially with the fear that came. I mean, I focused a lot on Bitcoin and crypto, and there was so much fear at that time.
Yeah.
Bitcoin low, and then it just skyrocketed to 30 from 19.5.
Yeah. The thing is, reading about that fear, when there's so much fear in the market, people are leaving their money on the sidelines. And so that means everybody's not all in, so you can't get a real collapse. The stock market will retrace, and in this instance, March looked like a really good high or low. Because everybody doesn't have all their money in, it's not going to lead to a systemic collapse because people are still fearful. And so that's half the battle, work out whether everybody's got their money in or not. And, aside from anything else, if the market ever gives you time to panic, it's all over. Yeah,
True. So, the other big one I got from the Gann lessons were that if it's a higher low with more fear than the low, it's one of the easiest bet.
Absolutely, yes. So I absolutely agree. And there's just so many people can't believe that.
Yeah.
Gann was brilliant, right? There's absolutely no question he was a genius.
Yeah.
Absolutely no question. And if you do decide to study a bit of Gann and you go through his charts in his book, you can see he will teach you how to read a market. Now that doesn't mean you get it right 100% all the time. Obviously, we all still make mistakes. But it's easy to say now it was an easy read, but we said in March it was forming a higher low, right? So you can't then start calling a systemic collapse. Right?
That was a really easy one to be out there. I mean, like you said, we say it
with Gann's background knowledge.
Exactly.
And then the secret to then, the real genuine secret after that is to overlay everything you've learned and what you were seeing in March. You overlay that then with the 18.6-year real estate cycle. That's the genuine secret. It really is. And that's what so few people can do because they don't understand.
That it's basically, by the sounds of it, we're in a macro bull market, which is the 18.6-year cycle.
The second half of the cycle. Usually it's the most bullish. And you can see already with all the banks reporting higher profits now, which they haven't done for a decade. And now, with the AI stuff coming out and with the genuine discoveries and the genuine
is AI a genuine discovery?
Yeah, AI and all the crypto stuff as well. It's
blockchain, NFT.
It's genuinely the underlying technology that's genuinely productive.
Yep.
I support it. I think it's fantastic that we're going to be getting some of it. But in the second half of the cycle, it will get excessively speculative and it'll go over the top. But the technology is sound, and it's going to bring prodigious gains, which...
We're talking Bitcoin?
Yeah.
Cryptos?
Yes, they're going to bring prodigious gains.
Anything else you want to add to Bitcoin? I know it's not part of the...
I'm not a specialist in those. I'll leave that to younger guys like you.
Okay, all right.
So
essentially that is going to bring more money into the space. And I showed you at dinner last night,
well, by
some
the
of those
end,
companies.
yes, by the end, everybody's going to be in the market. But, remember, Bitcoin is essentially, it's pure rent, right? Anything above the cost of production is just rent, and it's going to get very speculative. So don't get carried away at the finish. That's all.
Pure rent. What does that mean? Just so people that don't understand it. When I first started, I didn't understand what you meant by it's just pure rent.
Yes. Well, you get a cost of producing something, and if you allow a fair profit on it, like other things, like say you take a motor vehicle, it's got a cost of production, and we allow profit. But because there's so much competition to produce cars, the profit doesn't get out of hand. But if you take the mining for oil, governments give a license to dig for oil, then it's got a production cost, which is probably about, well, in Saudi Arabia, it's about $2 or $3 a barrel. But they can sell it for a lot more than that. The difference is rent. It's all about locational value, really. So if you don't understand it, you've got to research it. Go to some of the chapters in my book. You've got to get a handle on that. It's like riding a bike. Once you get on a bike and can ride it, you'll never forget how to ride. Once you genuinely can see what economic rent is, some people pick it up quicker than others, you don't ever forget it. It completely changes your worldview. As you know, because you've been there, right?
Totally. That's all I see now. That's why it's easier, like we say, it's just layering on top of those theories to make those calls. Because you're like, well, the macro cycle's up. Any low we get from here on till the peak is a higher low. Go in hard. And then wait for the peak. Wait for everyone to be exuberant, euphoric, and then collapse eventuates. Do you think
that's not hard, is it?
It's not really hard, no.
No, I don't think so.
I mean, we hear it all the time. The thing that's hard is there's so much noise out there.
Well,
so to be able to find the right information and then watch it play out and then trust it that it's going to work because you've done the research and spent the time in it, it's like, that's the hard part, patience.
Well, I'll tell you another thing too. One of the reasons people do find it hard is because we and everybody else, me, I'm not the only one, everybody is just completely full of opinions, right? Now, Gann said this clearly at the very beginning of his Truth of the Stock tape. He said quite clearly, be a bull in a bull market, be a bear in a bear market. But it's hard because at all times we've got an opinion about what we might think the market's doing. So I had a number, back in April, I think it was, I had a number of subscribers cancelled because they said, Phil, this time the market's going to collapse.
Oh, yeah.
And I said, well, you're entitled to that view, but at the present time, in April and into May, it did look to me like the NASDAQ and all the US markets,
they were winding up.
Like it was a higher low in place. They were winding up, right? So if you had the opinion that you thought things were going to collapse, you've just got to get rid of your opinions and just try and genuinely read the charts. Yes. And so, you get these opinions all the time, people coming out, giving their opinions, and it's confusing because it's just what it is, an opinion. So, I urge going back again and trying to understand the charts a bit, and in a bull market be a bull and in a bear market be a bear. Yes? And a bit of a knowledge of Gann's annual forecasts, how he did them, and a bit of a knowledge of the larger real estate cycle does help you read the weekly action of the stock markets and put them in a perspective, in a theoretical background, which I think is the land market, 18.6-year real estate cycle, allows you to just dump some of those opinions, just throw them out the window, and then you can start to see things for how they really are, right? But I tell you, it's hard to get rid of opinions. You see these things all the time. But once you can get on top of that sort of stuff and you realise that basically your opinions are shit, once you start to realise that, you have to take a more humble approach and say, well, maybe it's about time I don't fill my head with too many more opinions and try to allow them to move out until you can start to see a few more. I can't call them truths because everybody's truth is a bit different, but just
trying to stay diplomatic here.
Yeah.
With the humbleness, that's probably something that I need. How did you do it for the last 30 years? Because it's always happening exactly as the cycle continues to play out.
Oh, I'm only ever as good as my next forecast. Right?
Well,
you can get
it's been pretty good over 30 years.
Yeah, but you can get them wrong sometimes.
But
the bigger calls?
What's been a wrong one, and then what have you learned from that? So, because a lot of the guys that watch, they'll know you already. They're on my channel already. They want to know how have you grown over those decades with the cycle and your own investing? So you said you've got some things wrong. What have you changed in that? This is a...
Having said that, I know I have. Nothing comes to mind. But yes, you do get things wrong.
The only story I can remember you brought up was what you actually did. You got the 2007 top correct, but it's what you did after that that didn't work so well in the...
Oh, yes.
in the
Well,
class.
yeah, I did. I got the 27 top correct, and I was all prepared. I'd been to the bank. Then at
You got the top right, you got the bottom right.
Yeah, Westpac Bank in Lygon Street. I've been to see the manager there. I had
This is
everything in place.
Melbourne for
Yes,
all the
Melbourne,
internationals.
yes.
Yeah.
And it turns out that the only capital city in the world where property prices went up in 2009 was Melbourne, right? And here I was, I'd done all the correct work. But it didn't, in the finish, I realised, well, that was an error, that had been a mistake, right? What am I going to do? Well, as it happened, the Australian dollar strengthened, the pound collapsed for a brief couple of months. So that allowed me to take some money over to the UK. And I bought in London. Yes. Again,
So you turned a failure into a profitable venture.
But again, in the UK, it was absolutely impossible to get a loan. So the first place I bought in London, had to buy for cash, right? Well, I can tell you run out of cash pretty soon. You don't have unlimited sources of cash. So that was a minor setback, but, it was all right. It was okay.
So even in the collapses, because this is sort of like that next question that everyone asks, now that they're sort of getting it and they're waiting for this collapse, it's like, well, do I just sell out my property at the top and then wait for the bottom? And the often response is, well, you just don't know what the banks are going to do during that period.
Once you buy a property, I'm not big on selling it. And I don't think you should try and time everything's for the top of the market coming later on this decade. All you need to do later on this decade is sort yourself out.
What does that mean?
You don't go into massive debt.
Okay.
We all know what the winner's curse phase is, right? So when you identify the winner's curse phase,
it's about the last 2-ish years until that peak, which is...
Don't get all cocky with everybody else and mortgage your entire life on the next big deal after land prices have been 12, 13 years up. Okay, so that's just one of those things that you just you try and learn a bit. So we're not all perfectly. We do make mistakes, but I've had a pretty reasonable ability over the last 30 years to get the bigger calls right. Okay.
Yeah.
And once you get that cycles down pat, 2022 was always going to be a difficult year, which we stated. So you just got to go from there. Just try and get on the right side of the market.
With the land rights, do you see any of that changing? Because that is basically what the whole theory is built on over the last 200 plus years. Do you see any of that changing with a possible collapse after 2026 and then hard times? We're sort of moving into that war cycle. So if we get to a big collapse, wars, something like that, do you think anything will change in terms of the land rights?
No, because I just know from a lot of my subscribers over the years, people find me last. Yes. They have to go through everything else first. For some reason, there's a psychology thing in people. They have to go through all the things that don't work first to get to the final thing that does work.
So you're the right diet. They've gone through every other diet there is. Yeah. Okay.
And then eventually they find something that works for them, and that's fine. But
bare news sells better, which I think everyone knows. Yeah. And there's less bear markets over the course of history.
Yes, but bearing in mind, over the years, I have noticed that the bearish news and the bad news that seems to permeate, it's getting more emotional over the years, I think, and it's getting faster. And that's being driven by the new technology. It's coming in waves of days now, not over a week or so, and it's getting to you quick. So you have to react to your emotions even quicker. And this is causing people more and more stress, which is why I tell people, understand the bigger theory, understand the land market, and then you don't need to be swayed by all those emotions. But it's coming at you thick and fast now. I think that's going to get worse. And I think there'll be severe emotion once we get to the eventual downturn of the real estate cycle. It's going to be difficult. I'll give you an illustration of why I think it'll be difficult because over the next couple of years, and this has started in Dubai, with all the electronic developments that are coming and that are happening, eventually, if you're living in a house that the landlord owns or that the bank owns, access is going to be electronic. And so eventually, if you don't own the house, you're not going to get control of it. And banks or the landlord will be able to kick you out very easily or just simply turn off the electronics and you won't get back into the house that you thought you were in possession of. So this is going to get really stressful for people. Okay, this is why I keep telling people you need to understand the land market, you need to know what it's about and have some sort of idea of what's coming. And the very first thing I think you should be doing in the course of the next 3 years, own your own home. Own it outright so nobody can take it from you.
Outright?
Okay? Yes. Or at least
that's a pretty big ask for a lot of people. And
you have to understand these things and you have to do whatever it takes. Outright, perhaps, well, at least you've got to be in a situation where your mortgage of your own home is under control.
What does that mean?
And, well, it means that no matter what happens to you, you'll still be able to pay it off in difficult times.
All right.
Okay? So, anyway, that's just my view. Leave it there. I don't want to get...
No, that's okay.
Into it, but
the only other thing I thought of that people bring up from that point where it's like you don't own something is the World Economic Forum theories where it's like you'll own nothing and be happy. So is that kind of that...
I'm not into that conspiracy theory and that what the World Bank are being saying.
What they've said and it's the book and it's...
I think...
What do you think they mean by that?
Distraction. I think it's just a distraction.
You'll own nothing and be happy.
Do you think that'll be the case?
I mean, I can see it going with a lot of things that I prefer to rent a lot of things rather than owning them.
Well, so do I to some extent.
But it doesn't really have anything.
Lifestyle, but invest for a living.
Okay, so it doesn't have anything to do with your house itself.
But even so, I think you have to provide some sort of security. You've got to have a base you can go back to.
All right.
Okay. So you have to imagine how things might get really difficult after the turn, and they will, because you're going to have a total, over the next couple of years, you're going to have a total moron like Trump. He's just going to attract more and more attention. And so people are going to give him that sort of attention. And people are going to start worrying. But whilst Trump's taking all the attention, it doesn't allow for the system to change. And nothing will change. And so whilst Trump's taking all the attention, you're going to see the real estate cycle build and build and build. It's the same every second half.
Mm.
Yes, last cycle we got absolutely carried away with Paris Hilton.
She's come back, I think.
Well, yeah.
You can talk about her again in the next peak of the cycle.
Maybe.
Yeah.
There'll be somebody else.
We got Elon Musk now.
Yeah, he'll be one of a couple whereby we take as gospel every word he says.
Mm.
And we think just because he's made a bit of money, we think he's smart. But
a bit of money?
Yeah. We just
he's the richest man in the world. One of.
Well, okay, but just that seems to qualify. Everybody thinks that seems to qualify him as the world's smartest guy as well.
Yeah.
Okay. He and others like him with Trump, they will lead society into absolute chaos. I'm telling you now. Okay. So don't get carried away with these guys' opinions. Right.
Agreed.
Look what Elon Musk had to say at the very bottom last year. Right?
I put that in my video today. Yeah.
Yes.
I had a tweet on the 21st.
I have a bad feeling about this, right?
Recession will last until the spring of 2024.
Yeah, right.
At the bottom.
Jason, I'll tell you, he knows shit. He knows fuck all about economics, all right? This is where I start getting even more angry and carried away, right? But I'm telling you, right? Don't get me started, right? He will lead you to oblivion if you think he's got the right opinions. Because
we're talking about investing. That's what I usually say. He's an inventor. He might go to Mars. Like, he's got a lot of that stuff. He's a
great inventor.
Yeah,
I don't want to sell him short.
He's a genius on that side.
Yes.
When it comes to investing, not a clue.
No, well, he demonstrated to you that he's run by his emotions.
Mm.
Right? And if you are run by your emotions, you will never make money in the market because you'll always be on the wrong side. Okay? So stop listening to people's opinions and start working out how markets work with a bit of GAN background and then overlay it on top with a knowledge of the real estate cycle. It's not hard. Pretty simple, right? Okay.
I figured out why people don't like you or don't like me.
Yeah.
When the market's going up.
I love you, Jason.
Right. Thanks, Phil. I love you too, mate.
Thank you.
When the market's going up, we're always talking about, look, things are going to get pretty bad. When the market's going down, it's like, things are going to get pretty good for us soon.
Yeah. Yes, yes, that's
Because
right.
everyone wants to be hyped up, especially in crypto. Markets are going up. Everyone just has that emotion that I'm making a lot of money.
Yeah.
Don't listen to this idiot.
Yeah.
He's saying that it's going to collapse. Forget about him.
Yeah,
Markets are going down. I'm saying get ready. It's going to be time. Don't listen to this idiot. The market's going to collapse further.
Yeah.
They're so bullish on a bear market.
Yes, that's right.
Every single time.
Yeah, that's right.
Yeah. Anyway.
How many times does it have to happen before people realise you have to know how things work, right? And there is an underlying order to all the chaos. And a great place to start is with Gann's How We Read Markets, and then overlay the real estate cycle on top. Because Gann didn't have the real estate cycle. Gann knew about 18.6, but he didn't per se have stuff about the real estate cycle. And at the end of the day, there's only so high land price can go before it becomes unaffordable and uneconomic for business and labour to afford. Yes. And that the history of that seems to be 14 years up, 14.
With the 18.6, I had a couple of questions on that. One, I don't think you can answer, but we'll ask anyway. Is there any more that you can share besides getting in with the membership, with PSE, as to why it's always 18.6? Roughly speaking, I know you've said between 17 and 23 years, with the average being about 18.6.
No, if I started talking about that, Jason, I'd even go further off the planet, and it doesn't do me any good because people hold it against us. So
yeah,
subscribe. All right, I promise you, for anybody who subscribes to my service, the first thing they're going to get is a series of 14 introductory emails that talks about roughly the 7 cycles over that, and then they get access to all the classes I've run about all this stuff in the past. I promise them an absolute utter revelation. Okay, they get it after that. Then.
It was a slight segue as well because we've been talking over the last couple of days, and you've got some projects that you want to do, and one of them is writing that book because it's nowhere else in the world. Yeah,
I've got 3 things I want to do. One is a book on citizens' dividend funded by the economic grant because
your real passion project.
Well, yeah. As you know, I detest government. I detest, I bag Trump, right? But I don't think Biden's any better, right? So I detest both sides of politics.
But are you an anarchist?
All sides of politics. Responsible anarchism, okay? Responsible anarchism. Anarchism underpinned by the natural law, okay?
We won't get into that because that gets down too many different...
Yeah, that's right. But
it brings in too many crazy people as well.
So the first part is I want to get that book on how to abolish government, right? That'd just be absolutely wonderful. And then we'd all live in peace. And then I would like to write about the background of the 18.6-year real cycle, where it comes from and why it will turn. That'll be doing
why it will turn?
Why it will turn, yeah. Why it must keep turning.
Why we have to keep getting the ups and the downs.
Yeah.
If we all knew about certain things, would it ever go away? I say certain things, I know I'm being a bit secretive here.
There's just some people just never going to get it.
Never going to get it, right.
And there'll be others that just...
We're never going to raise to a high enough
Well, there'll be some... You do have quite a group in society that don't want you to understand this, right? Mason Gaffney wrote about that in The Corruption of Economics. If you haven't read that, you've got to read that too, where he demonstrates how economics has been quite deliberately corrupted. So anyway, we've been down that path before.
We've got the 2 books, the third one.
The third one I want to do a bit of a magnum opus on the real estate cycle, starting from the UK back in 1600, and then
400 years.
and then make a bit of a forecast for how that'll run. But that's a long-term project.
Will you ever do an update on the secret life of real estate and banking with the next cycle?
There's that too, right?
Okay.
We'll see. Okay. I think personally you can I'll leave that to somebody else probably. The book's been done. Read the book, you'll get it. You have to do it yourself. All right.
I've got one more. We're not done yet.
One more.
Relax. The one, it sort of gets towards that peak because we've talked about the cycle. This is where we think it's going. I know some people are never going to agree with it. They're just going to say, you wait, blah, 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 whatever.
Well, people said they don't agree with it because they've got to get on the other side of our trades, right? So I'm okay with that, Jason.
We'll fade them, as they say.
Yeah.
On the other side of this peak and the collapse, not saying what we think that peak is going to be, but do you see any signals as to what will happen after? The example I've got here, just to clear it up, is like we had the 1929 peak, collapse, Great Depression, Second World War starts.
Yeah.
Do you see something like that happening?
Oh, I think we're going to have to be a little careful. I don't want to forecast war because that can never really be certain. But I do think towards the end of this decade, things are going to get difficult. And
which year in particular?
You don't want to be on the wrong side.
Yeah.
2028 to 2030 probably, I think, are going to be difficult years. They'll be even, I happen to think they'll be even worse in China, right? So rather than the US, I'd never sell the US short. The US will recover like it always does.
Never get a changing like Ray Dalio talks about?
That
changing world order?
That sort of change doesn't happen over a couple of years. That's a generational thing. I do think that started, but it doesn't happen within 2 years.
Do you think it goes to China or it goes to someone else? Different countries? Like in the First World War, it was fought between the UK and Germany, and US rose, where everyone thought it was going to be out of these two.
I'd be watching India.
India?
If they ever get it right. But again, that doesn't happen over just one.
What about the Middle East? That's what I've sort of looked towards. Because I don't think China's going to get
those governments, the Middle Eastern sheiks, the Chinese government, they're scared of their people. And that can never result in a positive society. Their governments will never permit it because, first of all, the sheiks in the Middle East, do you think they're going to allow their people to pinch their $400 million yachts and their lifestyle where probably starting about now, all the Middle Eastern princelings, they all put their hundreds of cars onto cargo planes, import them into London and then drive them around Knightsbridge. Do you think they're going to allow their own society to stop that from happening? It's just not on the cards. And do you think that?
What do you mean by that exactly?
Well, would you ever change your Bitcoin or your Aussie dollars or your US dollars into dirhams? Would you ever change it into yuan?
I mean, if it became the world reserve...
But it can't become the world reserve because it will never be driven by dictators. Russian people...
They are dictators, no?
They are dictators, and so, dictators never finish well. So, people in
you're saying the world
Russia...
reserve currency...
People in Russia, people in China, presently, they're desperately trying to get their money out. Right? Society can never be built on people in that society trying to get their money out. Russians trying to get their money desperately out from under Putin's control. There's a lot of Chinese, they don't want to...
I mean, we see them all here in Indonesia.
Yes.
Or Bali.
Okay, so you don't see people trying to get their money out of the US. Everybody wants to put their money into the US. Well, if that continues, the US is going to be the top dog. And I can't see that changing, driven by economies that are run by dictators. So, history doesn't support it. Okay, and I think myself, based on repeating numbers and years that repeat in set timeframes, China's going to have a lot of difficulty coming up, far more than the US will.
Yeah.
Because the US is an open, free society, and when its years repeat, they're unlikely to repeat tragically because they have a dynamic population that wants to solve issues. Yes, the Chinese government will never allow its people to solve issues. They won't allow power to be taken from them. So, no, I just don't see that the difficulty is not going to be in the US.
I'm still baffled where this would go from the US. Maybe it's do you mean generational, like 80 years or 25-year generation type thing?
We're getting into circumstantial stuff.
Yeah, we are.
I don't know.
This is the fun stuff.
Let's wait for the top to happen first. There can't be a downturn unless we get a top to happen.
Yeah.
All right. Let's wait for the top to happen. It's nowhere near us yet. All right. We have
nowhere near.
Way more bullish. We have to get way more. Everybody has to be in the market, and they're not. That has to happen first.
Yeah.
So we have to see what happens. And if we don't get the huge move up, and it may not happen, if we don't get it up, we're not going to get it down. Let's see the up first. We'll have this conversation in a couple of years again. Okay.
Interesting. All right. Couple of years. Links in the description. Thanks again.
You're welcome.
To
Good city, right? Jakarta, fantastic city. Right?
I really like it. The area, it looks beautiful.
Yes.
The driving sucks.
Yeah.
Whether that we drove for hours. Gloria behind the camera here, it was like 4 or 5 hours in the car to go and see 20 minutes worth of walking.
Yes.
But the city is beautiful. I love how green everything is.
Yeah, people are good.
Yeah.
Weather's good.
Yeah.
And maybe the last thing, I'll just point out for people, right?
I knew I could keep you talking.
Greater Jakarta, 25, 30 million people live here, right?
More than Australia?
Yeah. No murders take place. There's no knife attacks. People are respectful. I think it's great. It's great.
Phil's part of the tourism board
Yeah.
here in Jakarta.
Yeah, so
Yeah.
come and visit.
It's lonely here.
That's good.
All right. Thank you very much, Phil.
Yeah. Pleasure.
Secret Life of Real Estate and Banking. I would say check out is it the first or last chapter that went through 2007?
Read the book.
Read it
Back
through
to front.
entirely. Back to front.
Yeah, start at the beginning. Good.
Yep.
Good.
Fantastic. All right. Thanks
Okay.
very much, mate.
Pleasure.
Thanks, everyone. Cheers.